Hey everyone, this is Ian for Bold Profits, and welcome to this week's video. So it's been a crazy past couple of days in the market. On Wednesday, we had the interest rate decision to lower, which was pretty much expected. We had there was sanctions put on Iran, and then Thursday we had the trade war reignited. There was an announcement that we would be putting more tariffs on China on September 1st, but we'll see how that goes. This news doesn't really mean much at this point because it's still a month away and there might still be negotiations made, as we've seen in the past. But all of this news combined kind of brought the market down the past couple of days. And I really want to focus on the interest rate decision. So first of all, a lot of people are probably confused about why the market went down after they did something good, which is lower interest rates. And even though this is something that's really going to help the economy, people had already anticipated this for months. And so people were buying in, pushing the market higher. And by the time the news actually got there, they sold. There was nobody really left to buy. A bunch of people got out because the event was done. They were looking for the next thing to invest in. And this is called buy the rumor, sell the news. And it happens all the time in the market on a market-wide scale, like with the S&P 500, like we saw this week. It can happen with a single stock based on some big event that's supposed to happen with a company. It can happen anywhere. So I just wanted to kind of clear up any confusion about that. That is why the market dropped on Wednesday. And then, of course, Thursday was most likely because of the trade war getting reignited, like I said. But I want to, again, focus on some of the headlines that were kind of misleading that came from this interest rate decision. And the first one was that people were kind of making it a big deal about how Jerome Powell, who's the chairman of the Fed, said that this is not going to be something that's going to start some big movement of interest rates going forward. And just to make this clear, this isn't really what was expected. It's not like people thought that rates were going to go back all the way down to 0 or even down to 1%. This is something that was going to start maybe 1 or 2 more after this one. So 2 or 3 interest rate cuts. And that kind of got overblown. People were like, oh, he said it's not going to be a long string of cuts after this. That means there's not going to be any. I think that greed kind of played a factor in that, because once you get one, of course, you're going to want more. It's just investors have gotten spoiled with this stuff, and anticipation was so high that he was going to cut that maybe they thought that there was going to be a lot, because maybe they got ahead of themselves, thought too far ahead of the market, and then got kind of confused why he said that there wasn't going to be a long cut or a long string of cuts in interest rates. But another reason is inflation. So without going into too much detail, when you raise interest rates, inflation goes down. When you lower interest rates, inflation goes up. They have an inverse relationship, and that is because when interest rates are lowered, more people and more businesses are inclined to take out loans, get more money because they don't have to pay back as much. And that makes complete sense. And inflation is way lower than people thought it was going to be. Back in 2018, when the market dropped in February and March of 2018, people were really freaking out about inflation was going to go out of control. And that never happened. And it barely even got up to 2%, which was the Federal Reserve's target. And in June of this year, it was down to 1.6%. So they need inflation to go back up, so they lowered rates. That's one of the main reasons, other than the fact that they didn't want to overstimulate the economy. Of course, if you raise rates really fast, it could do some damage later on that you don't see yet. And the example that I used before that is if you have a mortgage and your rate goes up 8 times in 2.5 years, you're not going to be very happy. Then that's going to have a toll on your financial position. So this is kind of what's happened with the economy. And on an economy-wide scale, that really could do some damage. That's one of the things that led up to the Great Recession in 2008. They raised rates almost twice as fast as we have in the past 2.5 years. So it's good that they're lowering it. And another headline that kind of leads into that is that Powell said it was a mid-cycle adjustment. And the word adjustment, I think, really threw people off because this was construed as negative. And people thought that just because he said adjustment, he meant that this was going to be the only time that they were going to lower. So there were no further interest rate cuts to look forward to. And they even asked him, is this a one and done deal? And he said, absolutely not. They used the words one and done so many times in headlines. They even said it on CNBC yesterday morning. And it just got thrown way out of proportion. He said that it's not going to be a one and done deal. So he's hinting at cutting a couple times in the future. And people got scared about this for seemingly no reason. An adjustment doesn't necessarily mean one. And even though the economy is strong, it's been really strong for a few years now, this is the middle of the business cycle. So it's a mid-cycle adjustment. An adjustment can mean that we are in a kind of a period where we're going to lower interest rates maybe 2 or 3 times. So we believe that the market drop was not really deserved, although we understand why it happened. It was mostly buy the rumor, sell the news. But some of these negative headlines definitely had an effect on that as well. And we just wanted to remind you that this is definitely good for the economy and that there most likely will be more interest rate cuts ahead. For the millennial portion of this, I want to talk about gaming, which is a big part of millennial culture. I know it's kind of been stigmatized, but it's what we grew up with. We were the first generation to ever really grow up alongside video games. I remember playing my dad's original PlayStation when I was 4. When I was 7, I had one of the best Christmases of my life because I got a Nintendo 64. It was all mine. I played it way too much, and it was great. And personally, I don't play video games as much as I used to, but I know that a lot of people in the millennial generation do play quite often, probably several times a week at least. And there have been studies out there that show that over 2/3 of millennials play video games at least once a month. And that seems kind of low, in my opinion, based on what I've seen just from people I know and what I've seen online, that just the popularity behind this is amazing. And 71% of millennials who do play video games watch video game reviews or video game just live streaming on YouTube and Twitch. And it's become a huge industry. So some of these live streamers that people watch make millions of dollars a year. And there's all these tournaments, like for games like World of Warcraft and League of Legends, just these huge online games where the prize money is insane. So like the most recent League of Legends International Championship in 2018, the top prize was $6.4 million. For another video game that's extremely popular, Fortnite, this 16-year-old kid just won $3 million for winning an international tournament. So the money here is incredible as well. So you could make a lot of money as a professional gamer these days. And 20 years ago, you never would have thought that was ever going to be possible. But another thing with online gaming is some of these games are subscriptions. Like the ones that I mentioned, World of Warcraft, League of Legends, are subscription games. And more millennials subscribe to these online games than they do for cable television. And that is kind of surprising to me. It sounds really surprising, but I am not too surprised by that because I know that a lot of millennials don't like cable. You don't have any control over what you're watching when. We'd rather watch something on Netflix where we can watch a whole season at once or jump in at any point in the show that we want to. And personally, I think a big reason that cable is even around anymore, like these big networks, is because there's all these like restaurants and like waiting rooms and stuff that continuously have the news on that nobody's really watching. That's still viewership and that pays their bills. So that's got to be at least part of the reason the cable news is even still around. That's kind of, in my opinion, in its last days, and video games and this online gaming is something that's really going to take a lot of that market away as millennials continue to grow this industry more and more. And I think Gen Z is going to follow in our footsteps. So there's a lot of growth ahead. Just from an investment standpoint, this is huge because this is the generational investment that you'd be making if you invested in the gaming industry. On a worldwide scale in 2018, $131 billion in sales were generated from the gaming industry. And by 2025, that's expected to grow all the way up to $300 billion. So it's huge. Hundreds and hundreds of billions of dollars are going to be spent on games and game accessories, game subscriptions, all these in-game purchases, things like that over the next few years. And it's an incredible investment opportunity. So U.S. is number 1 right now, $37 billion in sales generated last year in the gaming industry. China is right behind us. China's revenue is expected to double by 2023 to more than double to over $80 billion in 2023, which is crazy. Then you have these other markets that are really starting to emerge as possible leaders for the gaming industry. We have India, which is clearly a huge market. Over 1 billion people live in India, and it's a very young population. I believe that the median age in India is in their late 20s. So there's a lot of people that are just getting into this industry. Internet's becoming way more widely available, especially than it was like even 5 or 6 years ago. Like I think around 60% is connected to the internet now, and a lot of those are millennials because they're all tech savvy, and they want to play these video games. We actually have a recommendation in one of our newsletters, the $10 million portfolio, that capitalizes on specifically the gaming industry in India and Southeast Asia, which is a big emerging market for this industry. And so India is expected to triple their gaming revenues by 2023. So this is a big thing that's going on in a lot of the developing world, as well as the leaders like US and China. Southeast Asia and India are coming up fast as well. So this is a generational thing, not only here, but all over the world. So we've got billions and billions of millennials driving this economy or this market within the global economy higher. It's a really interesting thing that's starting to take place right now with gaming. There's so many things included in it. Like I said, you can watch it live, you can subscribe to a game, pay a monthly fee to play World of Warcraft or League of Legends. You can make in-game purchases. You can buy phone games. You can buy games for Xbox or PlayStation, for PC. Then there's VR. It's just all kinds of things that are driving this gigantic market higher. So that's what I wanted to kind of cover as my millennial theme of the week. And there's a great way to get in on this investment today. If you search for the ticker symbol GAMR, there's an exchange-traded fund, which means that you can basically buy an entire group of stocks for the price of one by investing in this single fund. You can buy it on any exchange through any broker, and it contains over 60 different gaming-related companies. So when you buy this one stock, you're actually investing in the entire industry, which is a great opportunity, and I believe that this is the best way to kind of invest in as many opportunities as possible in this really fast-growing market that's being pushed up by not only the millennials, but I think that Gen Z is right on our heels with this, and they're going to make it even bigger. And that is what I have for this week. This is Dyer, and happy Friday, everybody, and have a great weekend.